Now, the U.S. economy, which had shown signs of resilience after months of trade tensions and policy uncertainty, is now facing a fresh and potentially far more complex test. And the question now is, will this remain a continued geopolitical shock or escalate into a prolonged conflict that reshapes the U.S. growth story for 2026? We're talking about the West Asia war here. Now, here's a report that explains more.
The U.S. economy, which had weathered a year of trade and immigration shocks, is now facing a fresh geopolitical test after President Donald Trump launched military strikes against Iran. Oil prices reacted immediately, jumping 10% over the weekend before easing slightly. At the same time, shipping through the Strait of Hormuz, a critical artery for global crude flows, began slowing. This has raised concerns about energy supplies and trade disruptions. While the US is relatively insulated due to strong domestic oil and gas production, global spillovers remain a risk. Higher crude prices could lift fuel and transport costs worldwide, disrupt supply chains, and undermine what had been a strengthening growth outlook for 2026. The conflict introduces fresh uncertainty for the Federal Reserve as well. Interest rate futures still indicate expectations of 2 rate cuts this year, with the first potentially in late July. However, the path ahead now depends heavily on oil prices and the duration of the conflict. Historically, geopolitical shocks push investors towards safe haven assets. The 2-year Treasury yield fell over the weekend and the US dollar strengthened. But yields rebounded on Monday, signaling concerns about renewed inflation pressures. Economists warn that if oil prices climb towards $120 per barrel and shipping disruptions broaden beyond energy, the Fed could face a difficult trade-off between containing inflation and supporting growth. It will be similar to the balancing act seen after Russia's invasion of Ukraine in 2022. The economic outcome hinges on how the conflict evolves. A quick containment or a shift toward an internal power struggle in Iran could limit global damage and stabilize oil markets. But analysts also see the risk of a prolonged asymmetric campaign. This involves cyber activity, proxy forces, or attacks on infrastructure beyond the Strait of Hormuz. Such escalation could raise shipping insurance costs, impair supply chains, and weigh on global production. In the most severe scenario, US growth could stall, unemployment could rise, deficits could widen, and the Federal Reserve might be forced to cut rates aggressively to cushion a downturn. For now, markets remain cautious rather than panicked. But with oil, inflation, and monetary policy all at play, the economic outlook is once again tied to geopolitical uncertainty. Business Bureau, WION World is One.